thank you very much, Craig, for this introduction. So, hello everyone, welcome to this open house session with the non-farm payroll. I'd like to make, before we start, an audio and a video check, just to be sure that everyone is in a good state. Do you see my charts and do you hear me well? So if you would like to type a yes or a Y in the question area, or for the Max members in our private chat, that's similar. Okay, thanks. Miodrag, William, Winston, Jay, Kearney, Boldev, Ingrid, Tony, Robert. I see very familiar names here. François, Harald. Well, okay, thank you very much. So, so in 10 minutes, in 9 minutes now, we have the non-farm payroll release. So, but we have also the corresponding employment and unemployment numbers for Canada. So, if we have a big surprise in one of these two currencies, so we may have perhaps some good movement in the market. Let me explain what is my plan. So today, just to show how we can planify or we can plan a trade. And so the non-farm payroll is a rather difficult news to analyze because sometimes even when we have a very good or a very bad number, the market does not always react as expected. And one of the reasons is because we have to consider for the US dollar, in fact, 3 news. Which are released at the same moment and which are related to the employment and the unemployment numbers. We have the non-farm employment change itself, we have the unemployment rate, and we have the average hourly earnings. The average hourly earnings is one way to measure, or it's the measure of one of the components of the inflation. But the 2 main news which must be analyzed together are the non-farm payroll itself and the unemployment rate. And if we have, for example, a very good number on the non-farm payroll, we need to see a significant smaller number in the employment rate, unemployment rate, in order to see the US dollar strengthening, and vice versa. And this is the conditions I have written. So 645K is the forecast for the non-farm payroll, 266K is the previous month's release, and similarly for the unemployment rate. So the forecast is 5.9 against 6.1 last month. And for the average hourly earnings, the forecast is 0.2% against 0.7 last month. And the conditions for me are the following. It's not enough to see a better or a worse number. What we call the deviation must be a big deviation. And the deviation is the difference between the release data and the forecast. And so in this case, we will have a deviation big enough if we, for example, in the first direction, if the non-farm employment change is larger than 850K and the unemployment rate continue to drop at less than 5.7%, then we will have a big deviation in the 2 numbers. And so we will have to consider the US dollar as bullish. Normally, most of the time, this makes the US dollar becoming stronger. Not 100% of the case, because there are many other conditions in the market which can influence the market and which can make the market sentiment in the opposite direction. On the contrary, if we have very bad numbers, for example, a non-farm employment change less than 430K and the unemployment rate larger than 6.1%, and possibly the average hourly earnings less than 0%, so a decrease in this number, then most probably the US dollar will weaken. And so in these 2 situations, we will have a potential trade opportunity. If none of these 2 conditions are fulfilled, the non-farm payroll will not produce a tradable situation. And similarly for the CAD, we have similar conditions for the CAD, but for the CAD we have only 2 numbers, the employment change and the unemployment rate. And so we follow the same pattern. And so I have written here the conditions in order to have potential trade opportunity with the CAD. Now, concerning the pairs to observe, we establish every week, every Saturday, in fact, a list of pairs to observe and to monitor and possibly to trade for every day. Let me show you that here on our Newswatch page. So here, if you go on this address, so www.maxtradingsystem.com/newswatch, then every week we update, so this page, and there are several segments on this page. And by the way, they are freely available for everyone. And so if you want to be informed when that page is updated, you can input your name and your email address, and so every week you will be informed of the update. And so we have, first of all, a series of geopolitical events we have to pay attention, because if these events either escalate or de-escalate, we may have an impact in the market, in several markets, not only the forex market, but also possibly the stock market, the bond market, and so on. Then we have a simplified economical calendar, in which we take only for each day of the week only the news which are really important. For example, for today, despite the fact that there are more news, the only important news were, first of all, today, after the London Open, the construction PMI on the pound, which has been positive, this making the pound strong, and the pound is still the strongest currency for the moment. The US dollar and the CAD are a weak currency for the moment. Then we will have the CAD and the US dollar employment numbers. And all the other news, wherever there is a big deviation or not, have no impact in the market. Then below that, we establish every week a list of the 10 best moving pairs, so the best trending pairs. And because the max is a trend following system, and so better to choose trending pairs to trade. Better a pair is trending in general, better the results will be. If you consider a pair like the Aussie Kiwi, it may be perhaps a nice pair to trade, but the range of this pair, the daily range, is very small, and so not interesting at all, even in the 5-minute time frame, not interesting at all to trade. The potential for profits is very, very small. And then below that list of the top performing pairs, so we associate these best moving pairs with the news release day after day, and we propose here a list of maximum 6 pairs, sometimes exceptionally more pairs, but pairs for each day of the weekend. So today we have the pound US dollar, the pound CAD, the euro CAD, the Kiwi US dollar, the pound Kiwi, and the pound Aussie. There is a small typo here. It is not the pound US dollar because it's already at on the top line. It should be the pound Aussie. So I have observed that small typo yesterday evening when I was preparing my day for today. So this is how I have chosen the pair to consider today, and this is what you will see on my screen. So I have the pound US dollar, the pound CAD, the euro CAD, the Kiwi US dollar, the pound Kiwi, and the pound Aussie. The pound Kiwi and the pound Aussie because they are very often the most moving pairs, and then CAD and US dollar pairs, so for the 2 news release. So now we have, after the news, I will explain a bit the template I'm using. I'm using the template, essentially the template of the Max Primer course, but now we are at 1 minute from the news release. So what I'm going to do is I'm going to display the calendar, so with Forex Factory, so here, and we will wait until the news release, and I will also show on due time, so my numbers in order, so to see if we have indeed a big deviation or not. And we don't need to rush, because if there is a big deviation, I will explain what we will do. There will be usually a very important spike in the direction of the news, but we never try to trade that spike. We'll have to wait for a pullback, a significant pullback, but I will explain that just after the news. Now I'm going to try to concentrate on the news itself. Now we are waiting for the news release and for the numbers to be updated on Forex Factory. And it seems that Forex Factory is very busy today, a lot consulted by traders. It takes time to update. But I have another source of information if necessary. In fact, another calendar. There are plenty of calendar you can use, so but I like Forex Factory because it is a rather good one. So we have, for the non-farm payroll, we have 555K, 555K, so less than the forecast, but not enough to create a negative deviation big enough. You see here, negative, it should be less than 430, and the number is 559. So it's not a good number, but not a big deviation. So we are still waiting for the other numbers. It takes time for Forex Factory to adjust. For Canada, let's check for Canada. For Canada, we have, so the unemployment rate for Canada is 8.2% as expected, so no surprise. And for the employment change, we have -68. So we have a very bad number, but there is no change in the unemployment rate. So we will see if the CAD will weaken. And that's strange that we don't have yet the number on Forex Factory. Now let's go on MetaTrader. So I have said, so a bad number for the CAD. So it's not a surprise to see the CAD going, the pound CAD and the euro CAD going upward. It seems that we have bad number also. So we have a disappointment in the US dollar, so but not a big surprise. Now let me explain how usually the price is moving when we have a big surprise. So, and for that I will take, for example, the pound US dollar. And so usually, so let's consider the number have been negative, which is not totally the case. This is why this spike should not be a very big one. It is around 40 pips, so not a very big one in the context of the non-farm payroll. So we have negative numbers, and so we see the US dollar weakening, and so it's not strange to see the pound US dollar going upward. So this is the spike made by the news release. This is the first step. Sometimes there is a previous step with some speculative movement in both directions, so 5 to 10 minutes before the news release, but we have seen no special speculative movement before the news release. Then the second step is the price will make a pullback. We never know the size of this pullback, but usually we will have to wait for a pullback, a significant one. And I call a significant pullback when the price comes back and reaches our ETF lines. So these orange and yellow line on our chart. And then usually the price will break that pullback at some point, and the price will move again in the direction of the news. And this new movement is what I call the fundamental movement, and this is this movement which can be traded, in fact. But today, no big surprise, and you see the price on some pairs has come back very fast. So on the pound card, on the euro card, now the pullback start on the pound US dollar and on the Kiwi US dollar. And we have also similar spikes in the pound Kiwi and in the pound Aussie. Now let's go back to the Forex Factory calendar just to see if we have the numbers being updated just for confirmation. Yeah, so minus 68, so big deviation, but the unemployment rate has been unchanged on the CAD, so no tradable situation here for the CAD. The average hourly earnings is way better than expected, so this is a good number, but the non-farm payroll itself, so there is not a big deviation. So we don't have a big surprise, and the unemployment rate has decreased by only 0.1%, so not a significant change. So we don't have a significant non-farm payroll today, and so we should see, in fact, the usual trend or the previous trend resuming as it was before the news release. So, and so that being said, so let's see what we can do so here. So we don't have a tradable situation with the non-farm payroll, but because of the general context, pair like the commodity pairs like the Aussie, the Kiwi, the pound are strong, and the US dollar, the euro are weak. So the market sentiment is a bit mixed today. It's not clear if it is risk on or risk off. We can see, for example, that the US dollar is weak, but the pound is strong. The Swiss and the yen are average, have an average strength. So not clear what the sentiment is. And so if I take a pair, let's say like the pound Kiwi, the trend was essentially upward for the day. Now we are seeing the pullback, and so let's wait for the end of this pullback to see if the trend will reverse to the downside as suggested by this long spike to the downside, or if the previous uptrend will continue so for the rest of the day. So François asked, can you share your chart? But these are the primer charts. So we have on the main chart, so we have the price, we have our ETF lines. The small white and down arrows are the cross of these ETF lines. We have our Bollinger Bands, 1 and 2 standard deviation. We have also the home base and its home base channel. We have the max price levels, which have been established last week as every Saturday. And then we have our momentum oscillator, which is the Stochastic RSI indicator, and our bias indicator. You don't see my chart? Do you see my chart? Ah, okay, fine. Oh, I was afraid that my chart were not displayed. So, okay, thanks. And so this is our max primer template. The bias indicator is the red and green line. So when the green line is, when the slow bias is green, we have to consider technically long trades. When it is red, we have to consider a short trade. But we need to take into account the global context. So if the global context, for example, for today, my global context for the pound US dollar or the pound Kiwi, it's a bit difficult to say because the pound and the Kiwi are strong, but let's consider the pound US dollar. My global context for the pound US dollar was long on the pound US dollar, and so it stays long on the pound US dollar. So after the pullback, I will consider so a long trade because there has been no surprise, so no reason for the bias to be changed. But let's wait for a pullback. So we have to wait for the close of this red candle and perhaps the next one before considering any opportunities. So the pullback on the pound CAD has been good. Let's consider the pound CAD. So here, The pound CAD, my bias is long because the pound is strong, rather strong, not extremely strong, and the CAD is rather weak. So if I will get here in this new uptrend a valid entry setup, so I will consider, and I will use my max trade monitor, why not? Just to show you, so the aspect of the trade risk management. So we have to wait a little bit for the momentum, for the volatility to settle down. This dashed horizontal red line is the stop loss. We can move with the mouse, and we have the information panel for the trade, and we have the button panel for the orders execution. So we can buy or sell with the buy or sell button. It is a buy or a sell depending where the stop loss is compared to the present price. So if the stop loss is above the price, the EA suppose we want to make a sell. If the stop loss is below, it considers we want to make a buy. Then we have an MX, which is a partial close, and an XXX, which is a final close so of the trade. Because indeed, whenever we open a trade, the trade is considered as being made of 2 units. Each unit counts for 1/2 of the size of the trade. And so making an MX, which means a momentum exit, we close 1 unit. And then we have the information panel. In the symbol column, we have the numbers concerning the pound CAD in this case, and the global column represent the numbers if we have several simultaneous trade. And for each column, we have the ESL result. The ESL is the result we obtain for the trade if the price hits the stop loss. And you will see if I open the trade, the number will be a negative number because this will correspond to the risk we take on the trade. It will be around 1%. And the second important line will be the XXX profit. This will represent the result of the trade, not necessarily a profit, it may be a negative number, if we close the trade at any moment on the present price. We have intermediate numbers which indicate what is the open risk on the remaining open units, what is the open profit, which means the potential profit on the open units, and the closed profit, which corresponds to the result of the closed units in percentage or in pips. Then we have the stop loss, we have the pip value of the trade size, we have the spread, and so and some other auxiliary numbers which are not extremely important. So let's have a check on the other numbers. So the pound US dollar is making its pullback, that's good. The euro CAD is not moving at all. The Kiwi US dollar is not making big movement. So I will close the euro CAD and the Kiwi US dollar. I will focus only on these 4 charts, so I will retile my window that way. I will set also the MTM on the pound US dollar, just to be ready. That way, so we have the pound US dollar, we have the pound CAD, okay. And so now let's wait for an entry setup on one of these 2 pairs. And I still keep an eye on the pound Kiwi and the pound Aussie. So the pullback has been deep enough, just deep enough on the pound US dollar to touch our ETF line. My bias is still upward for this pair. So at the close of this candle, I will possibly consider a trade. It is not a trade to take because the numbers have not been good enough, but it is just to illustrate the process of our trade risk management. So I will set my stop loss in this area, and I will define now this candle is it an entry setup? Let's check. It's not a valid entry setup, unfortunately, so we still have to wait. So what is an entry setup? An entry setup, Lucas is asking, did you catch any of earlier move on the pound CAD after the London Open? What I have made, Luke, is I have traded, in fact, the pound Kiwi and the pound Aussie. And so with the London Open, I have got this up movement. It was not a big movement, but still a movement of around here 30 pips with a stop loss of approximately 15 pips, and the pound Aussie. And with the pound Aussie, again, also after the London Open, I have got this movement here, which was a nicer movement, a movement of approximately 40 pips, also with a 15 pips stop loss. The pound Kiwi and the pound Aussie are pairs I often trade because they are very often very speculative, very volatile, with lots of momentum. And this morning, for the London Open, the conditions were appropriate to trade these two pairs. But now the Aussie, the Kiwi, and the pound are rather strong, and so the direction of these two pairs is a little more difficult to consider. So now let's consider the pound US dollar. So the pound US dollar, we still have to wait. So this candle was a potential entry setup. So what is an entry setup? In fact, in the max, we define an entry setup as a specific pattern the price is making. So we have the pattern define the type of setup, and this setup is called, in this case, a REMO, a resumption of the uptrend, in this case of the uptrend, a REMO. But it's not because we have an entry setup that we have a trade. There are several conditions we have to fulfill. The first type of conditions are the technical conditions. And for that, we have to check the indicator we have on our chart. And so this indicator will tell us if, on a technical point of view, the setup is a valid one. The second type of condition is the risk. Where do we place the stop loss? And is this risk acceptable? For example, if I place my stop loss, for example, here, my stop loss would be 38 pips, around 38 pips. If I put it here below the home base channel, my stop loss would be 55 pips, which is way too much. And so we need to choose a stop loss which is an appropriate stop loss, and usually, but it is not a strict rule, in the 5-minute time frame, the stop loss we have for rather volatile pair must be minimum 15 pips and will be usually between 15 pips and 30 pips. Now, the last condition we have to consider is a condition linked to the global context. The potential trade must be in agreement with the global context. My global context for the pound US dollar was to trade the pound US dollar long. It stays long for the moment, so this is a long setup, but not all the conditions are fulfilled. So if I have a valid long entry setup, I will take a long trade. And so these are the conditions to validate, in fact, a setup in order to have a high winning rate. What do I mean by a high winning rate? If we ignore the global context, the winning rate of all the setups just following our slow bias indicator, so taking a long trade when the slow bias is green, taking a short trade when the slow bias is red, so we get a winning rate of around 70 to 75%. We have approximately 10% of break-even trade, and so we have around 20%, 15-20% of losing trades. And so you can say the ratio between the winning trade and the losing trade or rate is excellent, knowing that when we have a losing trade, the loss is always a very small loss, around half R. R being the risk, using, I'm using the Von Tarp notation, so here. And when we have a winning trade with the max primer, so we have a reward to risk ratio between half R and 1 R. Sometimes more, of course, sometimes less, of course, but on average between half R and 1 R. So if you make a quick calculation about the expectancy, you will see that the expectancy is positive. With the max standard, of course, we can scale in along the trade when the appropriate conditions are fulfilled. We can add to the trade by increasing the size of the trade, but we have to do that extremely properly. So this is what we call an entry setup. Then when we are in a trade, we have exit setups. And an exit setup represents a risk for the trade. Here I will pay attention to this candle at its close in 4 minutes, because we may have here another Remo setup, and it looks like this Remo will be a valid one. So my stop loss size will be set so somewhere here. So what is an exit setup? An exit setup represents a high risk level for the trade. And we have several types of exit criteria, exit setup. We have exit setup based on pure price action. Typically, and I do that in every presentation, so a long bar in favor of the trade is always a nice exit opportunity, at least to bank some profit. We have other price action exit technique, of course. We have exit technique based on indicator like the store RSI. We have exit technique based on a combination of price action and indicators. We have exit technique based on timing during the day. For example, when we have a news release, typically, if we are in a trade and we are facing a news, we have to close the trade before the news release, typically 15 to 30 minutes before the news release. We have exit technique based also on movement exhaustion, movement invalidation, and trend reversal. So, but what is the risk? Because the question is, what is the risk? We never try to predict what the price should do, except with the global context. Knowing that the global context is long for the pound to US dollar, we predict that the pound to US dollar will continue to go upward. This is the only prediction we make, provided our global context analysis is correct, of course. But what is so an exit setup situation? So a high risk level for the trade. Let's suppose we are in a long trade. Let's suppose here we were in this long trade here on the pound US dollar. You can see that at some point the price begins to make a pullback. Okay, in this yellow rectangle I'm going to draw on the chart. The price is making a pullback. And I will keep an eye on the clock, because this will be certainly a valid entry setup. So when the price makes a pullback, we never know how deep the pullback will be. And so knowing that we are in a trade and the price is going in our favor, we are making some potential profit. But when the pullback starts, we see a portion of our profit disappearing, of course. And at that point, it's only a potential profit. But we see a portion of that profit disappearing. And the question is, how much profit do we accept to sacrifice? When is the loss in the profit becomes important enough to force us to take a decision to limit that risk? And this is how all our exit setup work. In fact, the exit setup have the aim to quantify when the risk becomes too much important. For example, if we take this red candle here, you see here, this red candle was an exit setup because we had a top in our store RSI, but this exit setup has not been followed by an exit, because it is not enough to have an exit setup. Once we have an exit setup, we define an exit level, following a specific rule we teach in the course, of course. And if the price follows through and hits that level, then we make the exit. If the price misses that exit level, we don't make the exit. We stay in the trade. Now let's pay attention here to the, and this is how all our exit setup are working, in fact. And so we have short-term exit setup calling for an MX, closing 1 unit, and exit setup calling for an XXX, so a global exit. So the candle will close in a few seconds, and it will be necessarily, I can see that at a glance, a valid entry setup. Okay, we have, so here, the candle having closed. I will make my entry at 778, so on this level, 778. Okay, I make my entry, my stop loss is good. Okay, my entry has been made, so I have opened the trade. You can see that the ESL result, if the price reverses and hit my stop loss, I will lose a little less than 1%. Why not 1%? Because in fact the EA, it is a EA called the Max Trade Monitor, calculate the trade size, and it always makes a small round off in order to never have a risk larger than the accepted risk we take. My risk was 1%. I do not want to take a risk more than 1%. You can see that on the x-axis profit line, if I close the trade now, my profit will be 0.12% approximately, and this number will change with the price moving in our favor. You can see that the white line here, the horizontal white line, which is a max price level, a potential level for a resistance, and in the future perhaps a support, we have to pay attention. If the price rejects that level, I will have to consider making an MX. And so let's wait for that. Now I will move that blue line. So what am I doing? So here, that's not good. I should not move that line. Sometimes we have to struggle with MetaTrader to move some objects. So I have changed my stop loss. It was not good, so what am I doing so here? This is the problem with MetaTrader sometimes. So I have reset my stop loss where it was initially, as you can see. Now my stop loss was around so 26 pips approximately. The minimum profit I want to catch will be 13 pips, so just below this white line. And so let's see what the price will do. Normally the pound being still rather strong and the US dollar rather weak, so we should see the price continuing to go upward. But this is of course never a guarantee. But what I would like to show you here today in terms of trade risk management is how the decision we have in terms of closing one unit, adjusting the stop loss, will have an impact on our trade numbers. So the first priority for a max trader is never to focus on the XXX profit, on the result of the trade, but always to focus on the risk. And the aim of the rules of the max is to decrease that number whenever possible until we are in a risk-free trade. If we can be in a risk-free trade, because of course it's never a guarantee. We don't have a 100% winning rate. So we have a 70-75% winning rate if we ignore the global context. If we take the trade in agreement with the global context, when we have a clear context, so then the winning rate jump to 90-95%. Now, if you have any questions about the max, of course, feel free to ask, and I will be glad to answer. Yesterday, I was coaching a close friend of mine who lives in Belgium, and we stayed online for the entire European session from 9 a.m. Brussels time or 3 a.m. New York time until the London close or almost until the London close, using only the max primer approach, so entry MXXXX, so no scale-ins. We have made 3 trades and we have made a 5% profit using a 1% risk. So just having confidence in the global context. William, I have taken that trade because just to illustrate the trade risk management. The non-farm payroll, unfortunately, has not given enough conditions to consider a trade. The non-farm payroll number itself has been bad, but the unemployment rate has not changed significantly. So we had not valid conditions for a trade with the non-farm payroll. And similarly for the CAD, for the unemployment rate, that number has not changed. The employment number or change has been bad, but globally the two news have not given the expected deviation. So this is why the pound CAD, so it's not moving at all. You can see here the pound CAD is not moving at all. When the conditions are not favorable for the non-farm payroll, the pairs do not move at all. But here, because we have a 2-hour session, just to show some other aspect of the max, I have forced a trade. The trade I have taken is what we call forcing a trade. Forcing a trade is when we take a trade not in agreement with all the conditions. Just to illustrate, whatever the price will do, how the trade risk management minimizes the loss or optimizes the profit. Okay? And when we have some time, what we do is, in order for possible post-review later, and I review my trade every day at the end of my trading session, I mark my chart indicating what the setup bar was with a green vertical line, and an exit setup bar I will mark it with a magenta vertical line. And so now we need to be extremely patient until we get an exit setup. And so the most important number I focus is always the ESL result, because this is my potential loss if the trade turns against me. As a trader, we have to pay attention to our losses. If we pay attention to our risk in our trade, then the profits will pile up themselves. Stefan, yes, of course, when I give explanations like today, it's difficult to concentrate on several pairs, but usually I trade very often 2 pairs simultaneously, sometimes 3, but it's not frequent, but usually 2 pairs, yes. Because 2 pairs, even in the 5-minute time frame, and you know that I don't exactly trade the 5-minute time frame, but I trade the max sum, which is a variation of the max of the 5-minute time frame with much more details in the price action using the constant range bar chart. Or we can use also the Renko bar chart. That's not a problem. We can use any type of price representation. So just to illustrate the trade risk management, what I will do here, if the price reaches the max price level here, and if I see the price making an attempt to going downwards or to reverse, I will make an MX showing you how much profit this will catch. It will not be a big profit, but the profit will be large enough because this will correspond to approximately 13 pips, so which is my minimum profit requirement on this trade based on the size of the stop loss. And then I will adjust the stop loss, and you will see how the risk will be reduced. You will see the risk reduction with the MX, and then the further risk reduction with the stop loss adjustment. But for that, we need, of course, to see the price moving to the line, to the right line, and any other exit setup will be ignored. This is what we call a discretionary decision. In our Max Advanced course, I teach a lot of possible discretionary decision. A discretionary decision consists in introducing some flexibility in our exit techniques or in our entry setups, but always linked, closely linked to the trade risk management, because it's out of question, of course, to introduce some subjectivity with the discretionary decisions. And this kind of discretionary decision, which consists in ignoring any partial exit not producing enough profit, comes from the following point. 2 or 3 years ago, I have made a deep statistical analysis of all my trades since 2008, because I'm trading the max since 2008, so I have made several thousands of trades. I am by nature a very risk-averse trader, and so until 2 or 3 years ago, I was applying the rules without my discretionary decision. And so I have noted my results. But then I have analyzed all these trades, considering what would have happened if I would have skipped all the small profit or the small result MX, and making the first MX only when the profit was large enough. And then I have seen that on average my losing trade would have produced a little bit larger loss, but not a significant increase in the loss. But the profitable trade would have produced a way, way better result. So, and globally, the result was better. And so since then, I use systematically that discretionary, almost systematically, that discretionary decision. Because there is one situation when I am much more prudent when the price is in what we call a choppy mode, when the price is moving in a complete choppy way. So I'm much more careful in the way to do my exits. And so for this example here, if this candle, the present candle, closes as a red candle, we can see that there is a divergence in the store RSI because the price is making higher highs, but the store RSI is making lower highs. This is what we call a basic bearish divergence. This will be an exit setup, forcing me to close my 1 unit around my entry level, so producing no result at all. Perhaps a break-even, perhaps a small loss. And this is where my discretionary decision comes. I will ignore that exit setup. And this kind of decision is valid because my global risk on the trade is a very small risk. 1% risk on the trade is a small risk. And so if I have a full loss on the stop loss, this loss will not hurt my account, in fact. And so I can accept a 1% loss on my trading account for this one trade. But the pound is still stronger than the US dollar, and the US dollar continues to be weaker, so there is a good chance, never 100% certainty, of course, but there is a good chance that the price will move somewhat in favor of the trade. Let's have a quick look to the other pairs. So the pound Kiwi has made a pullback and then begins to move downward, as well as the pound Aussie. And I would be tempted to consider also a trade on the pound Aussie. Let me close the EA on the pound CAD, or let's put the max rate monitor on the pound Aussie. just to show two trades simultaneously, one upward, the other downward. And so when I will have a valid setup on the pound Aussie, I will take also a short trade on the pound Aussie. And you will see that it is not difficult at all to handle two trades simultaneously. An entry setup was possible, so here, let me check on this red candle. Yeah, it was a valid setup, so it's a pity I have not noted it before because the price has already moved nicely 25 pips in favor of the movement, but anyway, this is the beauty of the max. If we miss one entry setup, we may have other entry setup very soon. The Aussie is stronger, it's the strongest currency for the moment, stronger than the pound. So it seems that the market sentiment has changed for the pound Aussie. The Aussie and the Kiwi are very strong today. The Swiss is strong also. And if I succeed to open a second trade on the pound Aussie, you will see the global column will increase the numbers in such a way to represent the global result for the two simultaneous trades. So the global column represents the aggregated result of the two trades, the two simultaneous trades. On the pound Aussie, the max price levels are far away enough, so they will not be a concern. The max price levels are produced so every week, and they are valid for the entire week. So I will make the update Saturday, so tomorrow, and they will be valid for the entire next week. You can subscribe to these levels. There are two subscriptions formula. There was, first of all, one free subscription for just 4 pairs. So the Euro US dollar, the Euro Aussie, the Aussie yen, the pound yen. So 4 pairs for free. The full subscription, the full package contains approximately 30 instruments. We have lots of pairs. We have generally the top 10 or the top 14 pairs I have shown you a few minutes ago in our news watch list, plus 5 indices of the stock market, the S&P 500, the Dow Jones, the Nasdaq, the German DAX, and Britain, the UK FTSE 100, 2 commodities, gold and crude oil, the 10-year treasury, no, not the 10-year treasury bond, the Bitcoin, sorry, the Bitcoin, and I think that's it. So it takes me around 3 to 4 hours to establish these levels, so every Saturday. And this package requires a small monthly subscription. So you can contact Craig if you are interested, so in terms of the conditions, but the subscription is a very small fee. And the bias, so the global context bias, we call the max advantage bias. So is also available not for free with a very small monthly subscription, and you can have a bundle for the two for a very, very affordable price. Now we have a pullback here made on the pound Aussie, so a setup may appear soon. It seems that the trend is resuming on the pound US dollar. Yeah, Craig has mentioned his email address if you want any information about the coming core, the price levels, the global context, and so on. So feel free to contact him. I'm going to make a zoom in on the chart. We will see better what is happening. So that way, on the two charts. Normally, I don't like to make such zoom in. I prefer to have a more global picture of the chart, but I think you will see better what is happening. So now let's see if in this second attempt the price will reach my price level here on the pound US dollar. We are at a distance of 3 pips, 4 pips, 3 pips, almost 4 pips. And this is when patience is required and discipline. So a lot of patience, because you will observe that when there is some objective you would see to like achieved by the price, even 3 or 4 pips, it's difficult for the price to move. And a lack of patience is often what kills the trader's trade. Because when a trader loses his patience or her patience, so the trader can make any wrong decision, simply because the trader is attempted to have fast results. Okay, now let's see here. And observe here the ESL result. Okay, if I succeed to make my MX, still a little bit. Okay, now I'm going to make my MX, no, not yet, not yet. I would like to be close enough. Okay, let's make the MX now. So I'm going to make the MX now. And you see that MX where I have caught 12 pips, okay, pips taken, so 13 pips, 13.4 pips are enough to reduce substantially the risk. The risk was just a little less than 1%, and now the risk is less than 0.25%. This means that in the worst case scenario, if the price reverses fast and hit my stop loss, I will lose a little less than 0.25%. But because the price has moved in our favor, I can certainly, with a stop loss which is large enough, I can certainly reduce somewhat my stop loss. And we have rules for that. And so let's reduce the stop loss by around 10 or 20 pips. So here, I will move my stop loss here, for example, at this level, at 23, 24 pips. And you can see that simply by adjusting the stop loss at this level, now I am risk-free. I have even locking a small profit, a tiny profit, but still a profit. In fact, I am risk-free in reality. This is what I mean, in fact, in terms of trade risk management. And so the combination of the MX, the partial exit, and the stop loss adjustment is a very, very powerful way to control the risk on the trade. And this is the basis, in fact, in our max standard course to make our scalings. When we have such a control in the risk, we can make scalings in a very, very safe way when we have, of course, the appropriate conditions to make a scaling. In around 4 minutes, we will have most probably a short setup here on the pound Aussie. And so I will illustrate also that, that potential trade. It seems that it will be a valid one. If it closes as a red candle, it will be a valid one. The bias for the pound Aussie has changed to the downside. So the short trade based on the context is valid. So all the conditions will be fulfilled for a short trade. The MTM shows also how much time we are in the trade, so 20 minutes and 9 seconds, 20 minutes indeed, 1, 2, 3, 4 candles, plus the present candle. And you can see how the price seems to make a small pause here on the pound US dollar on this white horizontal line. And so you may call it a resistance level, you may call it supply or demand level. It depends how the price will finally react to that level. But there are nice levels, in fact, to consider banking some profits. And in fact, for the second unit here of the pound US dollar, now we have the choice. We have the choice to close that unit either on the next exit setup, or we may decide to wait if the trend continues to unfold to the upside. We may decide to wait until the trend exhausts, or the movement invalidate, or the trend reverses. These are the three conditions for our XXX, in fact. But because the trade is risk-free, there is no longer stress in this trade, no longer to worry about the result of the trade. At worst, we will be a little better than break-even. So you can understand that when you trade with the max in a small time frame, like the 5-minute time frame, you can use also the 1-minute time frame, by the way. But at least on the 5-minute time frame, this requires a rather lot of focus, of dedication, and concentration in order to try never miss a detail when the price is moving. In fact, the max trader should always be able to define at any moment all the potential scenario which can unfold, and to know what to do for each of these scenarios in such a way that when one of the scenarios will unfold, the trader knows what to do. It's not predicting, it's anticipating what may happen, considering all the possibilities. Now let's check here on the pound Aussie. I will not use my white line for the entry because this sometimes causes some problems, especially with the stop loss. So I will simply measure with my cursor where to make my entry. Okay, we have here the open. So I will make my entry in this level, so here. I can draw a small white line that way instead of the blue line. And let's check. So 2 pips. Yeah, that's good. Because the pound Aussie is a more volatile pair, I will use a stop loss a bit larger. Where is the next price levels for the pound US dollar? Oh, it's far, far away, so we have not to worry about these levels. Now you can see that here the price continues to move in our favor. The stop loss distance is increasing. This number here is always the distance between the present price and the stop loss level. It's around 29 pips. And so when the distance increases, and we have some rules for that, then we can tighten further our stop loss. With the max standard, we have other rules to adjust the stop loss. And so you can see that by simply moving the stop loss by how many pips here? By 5 pips. So my locked profit has increased somewhat. And so we are better than break even. And you can see that on the second unit, which is the running unit, we have one remaining open unit, so the risk of that unit is very, very small. Very soon, if the price continues to move in our favor, even the second unit will be break-even. But it's a bit too early to adjust the stop loss at break-even, and the stop loss would be a bit too small, because we have a rather good volatility for the moment. And we have a good uptrend. And in fact, this kind of approach of banking a partial profit of whatever the portion of the trade you want and the stop loss adjustment is a technique you can use with your own trading system. If you are using a momentum trading approach, a momentum style, a swing trading style, position size style, even a scalping trading style, you can use that kind of technique so to better control the risk on your trade. While the price is moving, so let me show you the kind of trade which were possible yesterday with the global context. So I will just show some examples. So let's consider, first of all, a pair which is not very volatile. So the Aussie US dollar, and so I'm going to show it here. I'm going to reduce the chart to be able to see the two pairs, the pound Aussie and the pound US dollar. So here, you see my bias on the pound, on the Aussie US dollar has been established just after the London Open. The London Open was right on this place. And so as soon as the trend, the bias has been established, it was a short bias, we can see that the price went in fact upward. So against my bias, so this sometimes happens, but soon after the trend has reversed, and look how it would have been easy to take the short trade, timing the trade with our technical bias indicator. We had an entry setup in this area, and so making that nice down movement up to that point approximately, or even down to the here to that point, because there was no trend reversal. Or let's pay attention here to the pound Aussie. Not yet. Okay, sell. Okay, the trade has been opened. Now you can see that on the pound Aussie, the risk is 1%. And now my global risk is less than 1%. Why? Because I'm looking some profit on the pound US dollar. Okay? And so I have now two trades with a risk, a global risk, which is less than 2% and even less than 1%, simply because the first trade is risk-free now. And now I will use the same technique. I will define my minimum level for the first profit. So the stop loss was, let's say, 35 pips. Half of that will be 17.5. And so 17.5 will be right a little bit higher, so right here on this level approximately. Yeah, so here. Let's check. Okay, we are good. I will take one more pips. So. And now let's wait and see. Now let me continue to show the examples of the chart. So this was the Aussie US dollar. Then here we have the Euro Aussie. My bias was long, a nice long trade. You see this nice movement between the London Open and the London Close. Then the Euro Kiwi, a nice long trade with a long bias. Then the Euro US dollar with a short bias, a nice short trade during the second half of the US session, the European session. Then here the pound Aussie, a nice long trade. It was a very, very important movement. So here, more than 100 pips. Then the pound CAD, long bias. Then the trend has reversed, and I had no reason to change my bias. So this is a movement I could have missed. So because I never trade against the context. Then the pound yen, long bias, so nice long trade. The pound Kiwi bias long, nice trade. So here, nice long trade. And you see, even if the trend has made an attempt to reverse, shown by the slow bias here, the price has never reversed in order to force us to take a short trade. Look, yeah, I teach the basics of the global context analysis, so in the Max Standard course, and some simplified version in the primer course. And I'm going to explain. Let me finish here. The pound US dollar, a nice short trade. The Nasdaq, a nice short trade. You see. The Kiwi US dollar, a nice short trade. The S&P 500 short bias, so a nice short trade. The US Treasury bond, see, short, and the price has moved essentially downward. And the VIX, I analyzed also the VIX on the 500, the S&P 500, so my bias was long. And I think that's all. The US dollar CAD long, the US dollar Swiss long, the US dollar yen long, and the Dow Jones short. Of course, at some point there has been a reversal because there has been good PMI numbers on the US dollar, but for me it was not big enough to change the bias. And then gold, my bias was short, a nice short trade, you see. Now, what is the global context? I'm going to explain in a moment the concept, Luke, about the global context. But let me check what is happening. So on the pound US dollar, so the price continue to move in our favor. I can somewhat reduce the stop loss. So let's put it here, or even just above the entry level. So you can see that now the second unit is break even. The global risk for the two trade is a little less than 0.75%, so reasonable small risk. And so on the pound Aussie for the moment, so the price is not moving really in our favor, so a little bit, but not enough to reduce the stop loss. I can perhaps reduce the stop loss because the stop loss is a bit large, so I can reduce it a bit this way in order to reduce a little bit the global risk, which is now 0.5%. Okay, now what is the global context, Luke? In fact, the global context includes all the driving factors of the market. What are the driving factors for the Forex? And each market, the Forex market, the stock market, the bonds market, the commodities market, may have different driving factors. Okay, in the commodities market, it's even more complex because the commodities market is made of a lot of commodities, and almost each commodity may have its own driving factors. So, but globally, what are the driving factors? At least for the Forex. Of course, the most important driving factor in the Forex is the interest rate. And so the decision of the central banks are to be analyzed very, very carefully. And so there are two types of information we have to analyze for the central banks. First of all, they're almost every month. This is not always every month. For example, the Fed makes its meeting 8 times a year, many other central banks every month. So we have to follow them for their interest rate decisions and their monetary policy. And when there is a press conference, it is advised to follow the press conference because the big boys follows also the press conference just to analyze the tone which is used by the guy of the central bank to determine if he is hawkish or dovish. Hawkish being optimistic, dovish meaning pessimistic. But there is a second type of information we have to follow from the central banks, their daily operations. You know that the central banks make a lot of different types of operations in the market, and they are documented on their website. And so you can see their daily interventions on their website. And so when they put a lot of money in the market, this usually weakens the corresponding currency. When they withdraw money from the market, this usually strengthens the currency. So the central bank. Of course, around the central bank, we have all the other economical news releases, which are illustrated, of course, in an economic calendar like Forex Factory, FX Daily, and so on and so on. There are many, many economical calendar you can follow. So by analyzing the deviations between the release data and the forecast, you can have an idea how the market sentiment will switch, knowing that nothing is 100% accurate. Okay. Then there are the geopoliticals. I have illustrated in our Newswatch page on our website these geopoliticals we have to pay attention. It's clear that the war between China and USA may influence not only the Chinese currency but also the US dollar. But there are other factors. The COVID, of course, is influencing the economies all over the world. The Brexit still influences the pound. We are still, I think, at the beginning of the consequences of the Brexit for the pound. Personally, I believe the Brexit is a good thing for the pound, and so on and so on. The situation in Middle East in general is delicate, and we have to pay attention. So the the deals which are made in Asia between China, some of the Pacific countries, Russia, may have an impact also in the fact with some currencies, because the Chinese economy has more and more importance in the global economy. So we have the geopoliticals, the central bank's decision, the news releases, and then when we trade a small time frame, when we intraday trade, like a 5-minute time frame, 15-minute time frame, 30 minutes, even 1 hour, we have to pay attention to some daily informations or daily data, because not all the hours during the day are made equal. We have to pay attention to what happens when we have the Frankfurt Open, the London Open, the Wall Street Open, the US Open, the New York Open, the Wall Street Open. Sometimes the Wall Street Open has some influence in the market, even in the Forex, and then the Frankfurt close, the London close, and the end of the day at 5 p.m. Eastern Time, and of course any important news release, as I have explained earlier in this session. And so these are all the elements we have to collect to understand. And so there are a lot of sources we can consult to have an idea what the market sentiment may be. Now, what is the market sentiment? Let's suppose that we expect that the Fed will increase significantly the interest rates on the US dollar. And so if the probability for such an increase is very high, and by the way, this probability is given on the Fed website, then we will see that before the Fed meeting, the US dollar will begin to strengthen. And so you have a trade opportunity. But then when we have the Fed meeting, perhaps the Fed will decide to change nothing, in which case it will be a disappointment in the market. And so you can take the decision to close your trade and to take the trade in the opposite direction. And so there are a lot of possible scenarios you can induce from the global context analysis and the specific market sentiment for each day. So the global context take into account the medium-term perspective of the market and the short-term perspective with all the elements I have just mentioned. So does this answer your question, Hugh? We have also what I call mini course, which goes in details in some of the subjects, and I am preparing a mini course on this global context, in fact. But if you decide to investigate yourself on the different elements I have mentioned, you will see that you will be able to learn a lot about the global context. With the max standard level, we have many more exit setup, so I would not be surprised to see that in this area, with the max standard, we had, in fact, an exit setup. But this is not the case with the max primer. With the max primer, we need to wait for this candle to close to see if we have an exit setup. How much time do we have? We are left with approximately 3/4 of an hour, so we still have plenty of time. TT rejection on the pantry. Oh, thanks, Francois. This means that here in this area, most probably with the max standard level, we would have an exit setup. And so we could make, for example, an XXX, so here at this point, showing that the profit is not a big profit, but a profit online with what we can expect with the max primer. But because the trend is still intact to the upside, I will ignore this exit setup. So because we don't see it on the chart, so I'm using the max primer. So I do not want to cheat. So let's follow what we are seeing on the chart. Now I can reduce a little bit my stop loss, a little more, not too much. that way, reducing a little further the global risk on the two position. We are still with a possible loss on the two trade, one which will be a winning trade and one which can be potentially a losing trade. I can reduce a little bit my stop loss on the pound Aussie, that way, reducing a little further my risk on the pound Aussie. You can see now the potential maximum loss on the two trades is less than 1/3 of 1%. I'm not too far away from the break-even for the two trades. And I will make the same thing if on the pound Aussie if the price reaches my blue line level. There is a good chance for that because the Aussie is way stronger than the pound, which is itself stronger than the US dollar. The US dollar is really the weakest currency today. You hear me talking about the strengths of the currencies, so you can imagine that I'm using also a currency meter, okay? But a currency meter, which is a nice tool to exploit, is not a holy grail, of course. It must be used correctly. It is not a holy grail which will give you for sure a trade. But the way I use the currency meter is the following. So let me show you my screen with the currency meter. So here I have my screen with the currency meter. This is one currency meter, okay? We can see that the US dollar, for example, the pound here is the strongest currency. Now, it is not necessarily always correct. We have here the US dollar. The US dollar is here, the green line, the weakest currency. So using a currency meter is not necessarily a holy grail in any circumstances. We have to use it very carefully. And the way I use it is when there is a change in the behavior of a currency, this is where the currency meter is very useful for me. Because if there is a change in the regime of a currency, I try to understand why. And I look in all the information of my global context analysis, what can cause that shift in the currency sentiment. And if I find a valid reason for that, then I can change my bias for that currency and so possibly the bias for the corresponding pairs. I can still reduce a bit further my stop loss, so that way. Continuing to reduce my global risk, you see now the global risk is less than 0.25%. And if I am able to make my MX here, my minimum MX level on the pound Aussie, believe me, I will be more than break even for my two trades. Not necessarily for the pound Aussie, but for the two trade, I will be more than break even. And in the meantime, of course, as previously, I can mark my chart. My entry setup was this one. Here on the pound US dollar, I have made an MX on this exit setup with the rejection of the max price level. Another way to close the trade when you have several trades which are running simultaneously is when you achieve a global result. On this panel, you can see that my XXX profit in the global column is not too far away than 1%. When the level of the profit here is good enough for you, then you can decide, you see 1%, you can decide to close the two trades and then do something else. You can decide to close your trading session and dedicate your time, the rest of your time, to something else. And it's up to you to define what you can do. You can see that with two pairs, achieving with a 1 risk percent, a 1 risk profit is not so difficult to achieve. If you can trade every day, if you can trade every day of the year, or if I should say more accurately, if you can day trade every day of the year, which is not necessarily easy, okay? But let's suppose you can day trade every day of the year. And if you are able to make just 0.5% profit per day, and you compound your profit, at the end of the year, you multiply your account by 3. If you are able to make a 1% profit per day, at the end of the year, you multiply your account by 10 to 12. The price is retracing now on the pound Aussie, so we need to be more patient. This blue candle, if it closes as a blue candle, you can see it will be an exit setup. Why? We have, this is a kind of exit setup defined by our oscillator, momentum oscillator, which is the stochastic of the RSI. We will have most probably a divergence, a bullish divergence. We have lower lows in the price, we have higher lows in the stoch RSI. So this will be an exit setup. But because this exit setup does not give me a result big enough, I will ignore it following my discretionary decision. But for illustrative purpose of this exit technique, I will make an MX, if this is the case, just to show you how an MX, even with a small profit, will reduce further the risk, not only on the trade, but on the global position. Just to show you several aspects of the trade risk management we have with the MAX. You see, 1% profit, you can decide to close your two trades and take your profit and run away. So take the money and run, like the famous movie. Young traders do not know that movie, I suppose, with Woody Allen, a long time ago movie. Now, to adjust the stop loss, generally, the main rule is to follow this pink line when we are in a short trade, or this blue line when we are in a long trade. But we have other rules which can help to refine somewhat the stop loss. Okay, I'm going to make an MX here, okay? Closing 1 unit of our trade on the pound Aussie. And look here, what the pound Aussie pair becomes. It is break-even. Itself, it's break-even, and globally, we are looking a little more than 0.25% profit. Rififio, Panam. This is Misha. See, now the two trades are risk-free. And so again, for each trade, we can decide to close the second unit of each trade, either on the next exit setup or at the trend exhaustion, the trend invalidation, the trend reversal. Now on the pound Aussie, so the stop loss becomes a bit large, I can decide to tighten it a little bit, for example, in this way. You can see that there is still a small risk on the second unit, but globally, the trade now begins to lock some minimum profit. And globally, I'm locking almost 0.5% profit. Luke is asking how realistic is it to achieve 1% per day result, because we will having losing trade days too. Yeah, indeed. But you know, Luke, when you trade with the max primer, in order to achieve 1% profit per day, you need to trade several pairs. And in general, it is easy to monitor 4 pairs and to take 2 or 3 trades at a time. But during an entire session, for example, I trade during the European session from the Frankfurt Open to the London close, I may have up to 10 trades per day. And when you take 10 trades per day, it's not difficult to achieve 1% profit per day with just a small risk per trade. And so it's not unrealistic. If you trade only 1 pair, it will be difficult, of course. And this is why you have to combine all the techniques, not only the technical aspect of the market, but also the global context. Just to show you an example, or to tell you an example, yesterday with 4 trades, 5% of profits. And you will have losing trades, losing days, of course, but your loss will be always very small, very small. And if you take 10 trades during a day, it will be extremely, extremely rare. I have never seen that, to have all the 10 trades losing trades. My worst day has been 10 trades, 3 winning trades, 5 losing trades, and 2 break-even. So 2 break-even, 3 winnings, 5 losings, and my day has still been profitable, but not using the max primer, using the max standard with the scaling technique. Okay? I can continue to tighten a little bit my stop loss, that way, for example. Locking now 0.5% profit. And this is why, in fact, look, in order to increase the probability to make a nice profit along the day, when I am in a trade, I try to stay in the trend as long as possible, using the trade management technique I'm illustrating today. But of course, let's suppose here on the pound US dollar that the price hits my stop loss. I will make a small profit, a little more than 0.25%, but it will be a profit. But if the trend continues to unfold in the pound Aussie and I stay in the trade, when the trend will reverse, I will make a way, way larger profit. And in fact, in the max course, I teach the concept of the true trend. What a true trend is a specific type of trend. And you need to know that such a true trend, which gives nice trades, will happen on average 2 to 4 times per week. And so you will have plenty per pair. And so you will have plenty of opportunity to make nice profit during the week. Now, do not expect to make necessarily a nice result every day, but expect to make a nice result every week. You see, despite the fact that the pound US dollar is retracing, so the loss here on the pound US dollar is completely compensated by the profits here on the pound Aussie. Now here you can see the trend has the possibility to reverse on the technical aspect with the slow bias. The slow bias on the pound US dollar, when the price moves a bit lower, tends to reverse to red. We have to wait for the close of this candle to see that the possibility of the trend reversal. But if I observe more carefully what is happening on our slow bias, sometimes the slow bias will indicate the possibility for a trend reversal, which is not the case here, unfortunately. And so here, most probably, the price will hit the stop loss. Note that if I had taken here this exit setup here, the trade would have been closed earlier, making a way better profit. And so sometimes when we wait for the trend reversal, we will make a smaller profit, but most of the time we will make a better profit. Now, with the max, we have also something which is, I consider, essential. Whenever a student who enrolls in one of the max course, the max primer or the max standard, later on the max advance or the max sum, but essentially with the max primer and the max standard, we have every Saturday, we have what we call a practice session. We call these practice sessions also scrolling parties, and they are completely free for our max members. So we have practice session for the max primer, we have practice session for the max standard. So every Saturday, for example, tomorrow is Saturday, we will have a practice session, especially for the max sum. So these practice sessions are free, and during these sessions, we show how we update our news watch list page with the news release, with the geopoliticals, the best moving pairs. So this takes approximately 20 minutes. And then we choose a pair randomly with a random date, or we take a pair proposed by one of the participants in the scrolling party, and we use a simulator to go by bar on the chart on the specified day to see how the trade would have could have been handled, applying the rule. And so we analyze in great detail each bar of the chart in order to see which rules apply and what we have to do when a rule applies. So, and it's a great moment. Each session lasts between 2 and 4 hours, depending how we are inspired and depending on the subject. And very often during these scrolling parties, we give also some nuances we sometimes see in the market just to show how the rules apply. Because there is the general rule and then there are a lot of nuances. But once you understand completely the rule, you understand also rather quickly the different nuances. And so these scrolling parties are really great coaching sessions, in fact. And we have max members, max traders who participate to these scrolling parties for several years now. And it's always a nice moment to follow. We have a lot of fun also, but a lot of education also during these sessions. It's also an opportunity for the members to show their trades or their chart, not necessarily their trade, but their chart, because what we advise is we are not licensed to show live trades, of course, but what we ask our members is they can mark the charts with the conventions we have, and then we can analyze their chart during these sessions. Now, this blue candle could be possibly an exit setup bar in a few seconds. And so let's see how an exit setup is handled on this exit setup. So 2 seconds. Okay, I will make my exit so somewhere on this level, and I will mark that level. So here, if the price follows through and hits that level, I will make my XXX, so closing the second unit of the pound Aussie dollar. Yeah, one of our members, let's make my XXX. So here, you see the price hit that level, so I make my XXX, okay? And you can see the final result on the pound Aussie, 0.5%. Okay, so Stefan, one of our members, said the continued support and practice sessions are really essential to be consistent. Yeah, because in fact, the secret, the real secret in being profitable in the market, in trading, is not to try to find a holy grail. You are the holy grail, in fact. And what do I mean by telling you are the holy grail? It's your ability to apply a trading process as correctly as possible. And you must to focus on the quality of the process and not on the result. If you focus on the quality of the process, the result will follow. Because if you have a solid trading system, if you have a solid trade risk management, if you have a solid money management, I have not talked about the money management here, which is completely different from the trade management. If you have a solid organizations, because trading also requires some organization, then you have to follow all these points in a very cautious way, and then you will increase the odds, very importantly, to become successful in trading. The trend is still intact in the pound Aussie, but I just wanted to illustrate another example of exit setup we have, of exit technique we have. Okay, Ingrid, have a good night. It's always a pleasure also to see you in our room. And a solid quote, like Zego says, Boldev. Thank you, Boldev. I appreciate. Passion, trading is a passion for me, and so sharing my experience is also very, very fun, because I consider that knowledge and experience must be shared. If you get some experience, a strong experience, keeping that experience for yourself, for me, makes no sense, because the day you will disappear, your experience is lost. And your experience may be also very useful and helpful for someone else. And so this is why sharing is always a good approach. Okay, now time is flying. We are almost at the end of this session. What I'm going to do is I'm going to close also the trade here on the pound US dollar. The trend is not over, so we still have the trend which is intact on the pound US dollar. So, but I will close the trade here, showing you the final result of the two trades, see 1.01%. And now I'm open for the last 5 minutes to any questions you may have, but I would just like to remember the price and the time for the course we have. So we have the standard course which starts on June 10th, and it will run for 7 weeks. We have the Max Primer course which starts also the 10th of June for 2 weeks. In fact, the Max Standard course has 7 sessions, but the 2 first sessions correspond to the Max Primer. And so we have the 2 sessions in commons with the two courses. And then with the third session, we will continue with the Max Standard for those who have enrolled in the Max Standard. And so for those of you who participate today, you will have a nice discount. So here. And so Craig will most probably repeat the link to enroll if you want to enroll, of course. And if you want to contact us for any other information, so feel free to contact us. We have our email address. Craig has mentioned his personal email address, and we have also a Skype you can call when we are available, of course. So my advice is put a message first to see if you can call, and then you will have an answer telling you when you can call. So Khurshid, I hope I pronounced correctly your name, Khurshid or Khurshid. So can we get the daily news even before signing of the course? Yeah, of course. Let me come back to our website. So here. So in this, so I suppose you mean this page, these informations, Khurshid. These informations are free, totally free, whether or not you are a Max member. And so this is the email address, the address. I'm going to put that address in the question area. So here, send to all, so here, okay. And if you want to be simply informed when this page is updated every Saturday, just put your name and your email address, register, it's free, completely free, and you will be informed as soon as the page is updated, okay? For the BIOS, the global context BIOS, you need to subscribe, but the subscription is very small. I think the bundle for the max price levels and the global context BIOS, I think it's $79 per month, I think. And Craig, you will tell me if I'm right or not. I think there was a trial period, but you will confirm if this is correct or not, because I don't remember. I don't handle all the sales activity. It's Craig, the role of Craig for that. So yeah, and Craig has repeated the link for the news watch list, so in the chat area. Robert says, had a real battle with the market today, but came out just ahead. Thank you, Zebio and Max team. Oh, you're welcome, Robert. Yeah, sometimes it's really, really a battle every day. But you know, the battle is, in fact, a battle against ourselves. Remember, we need a lot of patience. And it's not a surprise that on each of my charts, I always note it is part of the template, patience and discipline. It is a mantra I always keep under my eyes, just to remember that when I am in a trade, I have to stay patient and to be disciplined, applying the rules, and be patient as long as the trend is intact. For me, the trend is still intact, so I advise you to check what these two pairs will have made in around 1 hour or 2 hours or at the end of the day. And they will certainly still move somewhat in the upward direction for the pound US dollar and in the downward direction for the pound Aussie. And to confirm that done over, how long will the max primer sale the valid for, and to confirm that, how long will the max primer sale be valid? It's valid until the course starts, in fact. But as Craig has mentioned, don't try to enroll on the last day, because Craig has a lot of information to send you. So you still have time until next week. And yet we have 2 sessions for the Max Primer, indeed. 2 sessions, on the 10th and the 17th. On the 10th, I teach some important concepts of the Max and the entry setups. And on the second session, I teach the exit setups, and I make an introduction to the global context. So these are the main subject of the Max Primer course. And of course, we will continue on the third session with the Max Standard on all the other concepts and rules of the Max. And in fact, to tell you even the truth, there is a bonus session for each course. So the Max Primer is made of 3 sessions. The third session is a bonus session, and in this bonus session, similarly with the Max Standard course, so I make a complete demonstration using a simulator because I want to illustrate some very specific nuances. I make a complete detailed demonstration of 3 types of typical situations you will face trading in a small time frame. How to handle a trade in a choppy mode, what is a choppy mode and how to handle a trade in a choppy mode, how to handle a losing trade, because we have losing trades, of course, around 20 to 25, 15 to 20%, and how to handle a winning trade exactly or almost exactly as I have illustrated today in these 2 examples. Okay. Trading time in US. Yes, it's always starting at 3 p.m. New York time. 3 p.m. New York time. Each session is recorded and the video is made available around 24 hours after the end of the session. So all the sessions are recorded and you will receive the video. Okay? Why a video? Because we want each of the students to keep track of the teaching, and there are homeworks assigned at the end of each session, and we always advise to rewatch the video at least once before making the homework and sending the homework. The duration, oh, that's a good question, Kershade. Each training session, so each session lasts between 3 and 6 hours. So they are dense sessions because there are a lot of information. Even the Max Primer, there are a lot of information to distribute, to understand, and to apply. But we make breaks, of course. We make 1 or 2 breaks during all that time. Okay? Daily, no, it's not a daily session. It's 1 session per week. It's 1 session per week. So we have 2 sessions for the Max Primer, so 3 sessions with the bonus session, and 7 sessions plus 1 bonus session for the Max Standard. This is why, in fact, these sessions are long. And don't forget, we trade ourselves, so we have to organize in the best way that teaching. You get the indicator download after the end of each session. So for each session, I introduce a little more indicators. So you will receive the indicators and the template for each session. For example, for the Max Primer, on the first session, you will receive the complete template and all the indicators which are required for the Max Primer. But for the Max Standard, we build the template progressively, session after session, by introducing more and more tools. We use MetaTrader 4, but we have almost all our indicators for NinjaTrader 7 and some of them for NinjaTrader 8. We have also some of the indicators for TradeStation, but we don't have the possibility to develop the indicator for all the possible trading platform. But if you want to develop or redevelop, recode our indicator for another platform, we give you the source code. What is the difference between the course? Or simply, the Max Primer is simply a simplified version of the standard course. In the standard course, we go way more into the details with many more possibilities. For example, the scaling technique. How do we make scalings? We go deeper into the analysis of the exit techniques. We go deeper into the analysis of the global context. Anything for TradingView? No, nothing for the moment with TradingView. Nothing for TradingView for them. Perhaps one day. I'm considering NinjaTrader very seriously and TradingView. Okay. And in fact, we try to follow the big trends in the market. TradingView has probably some future. I like TradingView because TradingView allows to make some deeper analysis, especially with the global context. There are a lot of possibilities that are really fantastic. So yeah, NinjaTrader 8 or 7 or 8, but we don't have all the indicators for NinjaTrader, unfortunately. For example, in NinjaTrader, we don't have the slow and fast bias, unfortunately, at least for the moment. Okay. Okay, thank you very much. I hope I have answered all your questions. If you have further questions, so in the coming hours or days, feel free to contact us. It will be with great pleasure that we will answer to your questions. So never hesitate. Don't feel shy. In fact, there is never risk to ask a question. If you don't ask a question, you will never get a response. So the highest risk is to never ask a question. Okay, thank you, Randy. Thank you, Robert. Thank you, Boldev. Thank you, Misha. And so thank you, all the other members, the participants in the room. There are too many of you, so I cannot thank you, everyone. So I have just mentioned our max members. Oh, you speak French, William. That's nice. Thank you, Francois, Harvey, Luc. I hope you have enjoyed that session, and so I will keep now my MetaTrader platform before we wrap up. Anything else to add, Craig, before we wrap up this session? We have 2 sessions for the primer course, Kershett, plus the bonus session. Ah, all good, says Craig. Okay. So we have 2 sessions, 2 teaching sessions for the Max Primer, plus the bonus session. What is the difference between the Max Primer and Light on web? Oh, the Light course is in fact a level between the Max Primer and the Max Standard. So we have a little more entry setups and a little more exit setups in the Light than in the Primer. And it is a good refresher for those who have taken the Max Standard course. In fact, the concept is the following. Once you have taken the Max Standard course, okay, any further Max Primer or Max Light course can be taken for free. So that's the idea. This is why the Light is something between the Primer and the Standard. So just a refresher. And so this is the difference. 10th and 17th of June. Yes, Kershett, at 3 p.m. New York time. Okay, thank you, Luc. Well, so I think I have covered all the questions. I thank you very, very much for your participation today. I hope you have enjoyed the demonstration of some of the concept of our max trading system. Again, feel free to contact us if you want more information. I wish you a great rest of the week. Keep safe, of course, you and yours, and let's see in a future max activity, either another presentation or a max course if you decide to enroll in one of the courses, the primer or the standard. So, and in the meantime, take care. Bye, everyone.